Hey, what's up, everybody? It's Max from River Rock Financial Group, and I wanted to do a short presentation on business expense protection and disability income protection. And basically, what this is it is a way for business owners to do two things at once. Now, you can obtain disability income protection as an individual. The added benefit of the BE or business expense protection is that the business owner can take out DI or disability income protection on themselves, as well as have a policy for their business expenses if something happens to them. Do not get disability income protection or income protection confused with workers' comp. Two totally different things. And before I get started, let me say you can like and subscribe YouTube, follow me on Instagram and or Facebook. So without further ado, let's go ahead and get started. I know this is going to add value to you and your business. All right. So once again, my name is Max. The agency is River Rock Financial Group. You can find us at rrfgwealth.com. We're licensed in Georgia, North Carolina, and Texas. Follow us on Instagram, Facebook, and or YouTube. All examples are for illustrations only. These are not representative of any particular investment or an offer of insurance coverage or benefits. Values shown are before tax. All withdrawals from a retirement plan are taxable as ordinary income. Please consult your tax expert and or advisor. Now, when I do other presentations, I go through the 6 most common reasons and or excuses as to why people don't have insurance. I'm not going to do that on this particular presentation. All right, but I am going to talk about the mission of River Rock Financial Group: to teach people, individuals, and businesses about creating and sustaining generational wealth, strategic future financial planning, and asset protection and accumulation. So let's go ahead and play the video, and let's check out what DI or disability income protection and business expense protection does for business owners.
All coffee and donuts. You know, cheese and everything. Cheese goes with everything. DI and BE, how they are required for small business owners. Business expenses like certain employee salaries, office maintenance and repair, and lease or rent payments, just to name a few. DI just go together. Yes, business owners may be eligible to receive a 5% discount on DI and DE premiums with both coverages for liability and issue. Find out why so many small business owners protect their income and have their business in DI and DE.
All right, so that's pretty much it in a nutshell. That particular carrier that we partner with is phenomenal at DI and business expense insurance. There is also the extra added value benefit that this particular carrier, Illinois Mutual, does that I don't think any other carrier does do, and that's called a return of premium. So I'm going to skip this particular example to get to one that is, all right, so this is where I want to be. I want to make sure I'm valuing everybody's time. So here's a common misconception. I don't need disability income because workers' compensation will cover me. That is not the case. Workers' comp is only designed for on-the-job injuries, okay? So DI is designed for any time, 24/7. If something happens to you off the job, your disability income protection will cover you. All right. So once again, disability income insurance is not the same thing as workers' comp. if you're a business owner or not, it's not the same thing. Okay. DI provides income protection in case of a disability due to illness or injury anytime, any place, not just when you're working. So let's remember that. Okay, DI month pays a benefit. Disability income insurance pays a benefit that can be used for personal expenses like mortgage, utilities, and groceries. What they like to call MUG, MUG. Now, here is the beauty of this particular product. In this example, this 35-year-old non-tobacco user says, hey, what if I don't ever use this particular policy? Cool. There's a thing called a return of premium rider, which means if you never use it, if you never use the policy, you will receive some or all of your premium back to you. Now you have to wait 4 years. Okay. After the fourth year, you'll start being able to receive a portion of your policy premiums back to you. That means if you pay X amount every month, at year 4, if you decide you don't want the policy, then you're able to start receiving. You say, I want to cancel the policy after 4 years. You may be eligible for a portion of that back. Now, if you let it just keep going, if you hold on to the policy, which is what I recommend. I said I wasn't going to talk about this, but I am. So the problem that most people have is they don't need it until they need it. This is not a exciting topic. People don't want to talk about insurance. People don't want to talk about finance. People want to talk. The only time people want to talk about money is when they need it or when they want to have some entertainment. It's the only time people want to talk about money. When you need it and when you have some entertainment. They don't want to talk about it when they pay bills either, because it's money leaving their account or pocket. So let's continue. So with the return of premium, if you never use it, you're able to recoup, receive your premium payments back, some and or all. I'm gonna show you how to receive all premium payments back. If you say, I'm gonna let this policy go to age 67, if you hold on to the policy, you can get your premium back. We insure everything else except us. We do the minimum for our businesses. We do the minimum for ourselves. But then you say you can't afford it. However, we're doing all these things. There's a mandatory insurance tax on your car. Your car is mandatorily taxed. Insurance is boats, motorcycles. We insure pictures, recreational vehicles. I see people insure jewelry, shoes, clothes, artwork, and pictures. But then we don't insure ourselves. So here, let me go to an example of what return of premium would look like for a business owner who decided to do this. Okay, so we're going to stop this share, and then we're going to share. Make sure I'm sharing. All right, so here we go. Here's an example of what's known as the Paycheck Power Series by this particular carrier, Illinois Mutual, which we are contracted with. So if you want to do this, reach out to me via Instagram, Facebook, or YouTube. Okay. Or you can email me at River Rock Financial Group LLC at Gmail. Okay. So here we go. Here's an illustration. Illinois Mutual is A rated by AM Best. I'm going to skip all of that. So here we go. This person, age 42 male, 41-year-old male, 41-year-old male. They have a 30-day elimination period, which means 30 days. If something happens, you have to wait 30 days to receive benefits. Okay. The current income is $150,000 a month, a year. I'm sorry. $150,000 a month would be cool as well. And so the earning potential to age 67 right here is 3.9 million, right? So here we go. I want to get to the most important parts. If you want to do this, reach out to me and I can go over it in grave detail. Okay, so here we go. So the total monthly benefit to this person for this premium of $365.65 would be $8,023 for $222. Now, that premium covers the total. Now, partial disability will be $4,012. Total loss of sight and total dismemberment, double dismemberment, $8,023. So all of this is included in the premium. The organ donor benefit, the survivor benefit, the waiver of premium provision, the suspension of policy during unemployment, all that is included. Now, the activities of daily living rider, 2 years, $2.06 a month. Return of premium, $139 a month. Guaranteed insurability, 83 cents a month, which brings a total of $365.65. You can be paid monthly, quarterly, or semi-annually, or annually, right? So now if you go down, here's what happens. Make sure I can find it. With the return of premium rider, let's say nothing happens. Let's say nothing happens. At 67, they can say, hey, that was cool. I want my premium back. Cancel the policy. They will receive $108,035.20. $108,035.20. Granted, no benefits were paid. Here's what you have to think about. You would need to pay into some type of financial vehicle, some type of investment, $1,590.26 for 26 years at a rate of 6.51% to receive $108,035.20 on your investment. So basically, in order to receive that back outside of this policy, you would have to invest roughly $1,600 a year. Can you do that? Of course. Why would you not receive the double benefit of having the disability policy plus the return of premium added to that? Think of it as a long-term savings account. And so that's the last thing I want to say. If you would like me to go into this policy example in detail, please reach out to me. But here's what I want to say. Let me go back to let me go new share. Okay, maybe it doesn't want me to share. Okay, you don't want me. All right. Here's the problem. You have to ask yourself some questions along with these. There's a lot of questions you got to answer. But what and who are you protecting? Okay. Insurance is about discipline. It's not about immediate gratification. It's about long-term gratification. Long-term gratification. Yeah, there are term policies. There's a lot of different ways you can use insurance. But the main message here is long-term gratification when it comes to covering you, yourself, your business, and your children, your charitable organization, whatever the case is. Please reach out on Instagram, Facebook, or YouTube. Follow me on all those. You can email me, go to the website, contact me, direct line, office line, what have you. Okay, and until next time, do what is difficult while it's easy. Don't wait till the difficult becomes undoable.